All right, David, let's start with the concept of cadence, because we have a lot of younger viewers now watching. I'm trying to explain. It's entirely possible when you see a net number, say for KFC, which was a blowout, that it may be that the beginning of the quarter was not so good, but you finished strong at the end, correct?
You've got that exactly right, Jim. The momentum that we had this quarter was really impressive. We started from obviously some depths coming out of the initial impact of the virus, but our teams around the world pivoted very quickly, embraced consumers' new needs, and really strengthened the business as the quarter went on. You think about, what happened in April, which is included in the quarter. That feels like 2018 to me. That's so far in the rearview mirror. What matters right now is the momentum in the business and where we're headed. And we're really confident we're headed to a good place.
All right. Now, Pizza Hut in the United States, which I've been quite worried about because it's been a laggard, you had a 1% same-store sales. Now, I want people to understand how many actual physical restaurants could you go into in Pizza Hut and sit down and eat with that number?
Yeah, actually, Pizza Hut in the U.S., I think, was up 5. But the reality is, if you pull apart the Pizza Hut number, back to your point about really understanding the details, the Pizza Hut delivery and carryout business was up 21% in the United States when you exclude closed stores, closed express units. So that's really the relevant number. Obviously, that's a great number. It stacks up well against the competition. And that's all done, as you point out, with dining rooms closed all around the United States. We essentially don't have any of we have very few Pizza Hut dining rooms open today.
Yeah, it turns out the model is better than I thought for this. But the one that I'm confused about, why did you not break out Taco Bell United States?
Taco Bell U.S. always very, very closely mirrors the global number since the preponderance of our stores are in the U.S. But that number was 7%, the down 7%. Importantly, if you look at what Taco Bell was lapping, they lapped a huge quarter last year. So they're actually slightly positive on the 2-year basis. And they're a great example of what I was talking about and what you mentioned early on, the cadence of the quarter. They got hit harder than any of our businesses in the U.S. just because they had a higher dine-in percentage. And the breakfast and late night business, as has been well documented, those parts of the business have gone away as people are mostly staying home. So they had a lot to overcome. They got hit the hardest at the beginning of the pandemic, and they've actually made the most progress during the quarter. And as we pointed out on the call, the business has stabilized in June and July. Actually, all 3 of our U.S. brands are positive right now.
Yeah, I was reading this morning that Taco cut 18 seconds from drive-through time. I mean, where are we in making drive-throughs operationally perfect?
Yeah, the Taco Bell team, Mark King and Mike Grams, their chief operating officer, and the entire team, the franchise partners, have done an amazing job embracing the need for speed in this environment. They're now below 4 minutes now on total time for customers. And with the ability to order Taco Bell on the digital app with just one click and then pull into the drive-thru and pick up your food, there's no better way to get an amazing meal in an incredibly easy way.